at a high level, risk adjusted means like taking into account a risk-free rate, and that looks different over different periods of time.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into another episode of the Freedom Point. We're so glad you're here with us today. Really appreciate you tuning in to each and every episode. I have an amazing guest with me today, John Henry. John, welcome to the show.
Thanks for having me, Jeremy.
Yeah, absolutely. Looking forward to this discussion. John is a polymath with a background in mathematics, finance, and AI. He's held roles ranging from professor to, get this, professional cage fighter. Interesting. And now he leads a data science and AI at a top global insurer with advanced degrees in statistics, international real estate, and more. John's expertise spans machine learning, risk, and wealth management. John, I only kind of highlighted a little bit of your bio there, but really I'd like to hear more from you. So if you wouldn't mind maybe helping our listening audience learn a little bit more about John and maybe what your journey has looked like and maybe what you're focused on today.
Yeah, sounds good. So I started out, I guess, a poor kid, kind of wild home life. Barely graduated high school, food stamps, Section 8. A lot of people maybe didn't think I was going too far. I was kind of in and out of trouble, but I like to say that it's a love story. I mean, I fell in love. I tell people with mathematics, and that kind of, I guess, set me on a path to make something of myself. Did a lot of education, advanced degrees, and that opened up a lot of doors for me. I was a professor, and from there went into the insurance world as an actuary, predictive modeler, data scientist. Different names, but all kind of the same thing: building models, forecasting phenomena, quantifying risk. And in recent years, I've kind of diversified. You mentioned some of these other domains, real estate, finance. I did a little law degree. Just learning things, and that's opened up more doors. And with the analytics, I'm able to solve problems and add value and do things in these other domains and kind of connect the dots, and just really having fun, loving it, kind of a lifelong learner. And I'm not sure, where that stops or if it does. I suppose I'll just keep it going. You mentioned cage fighting. That was a good time. I had a fun run doing that. We might get into some stories doing that, but I was an athlete, as a young man, and as I started being a professor and kind of working corporate jobs and still fighting, it made for nice stories, and even I think maybe opened up some opportunities. Having videos of me in the cage, getting usually winning, but taking some beatings as well. It was fun. Got some good laughs out of that with folks. So that's a quick summary. Happy to elaborate on any of that.
Yeah, no, appreciate that. And it's interesting that you talked a little bit about your, background, not having come certainly from any wealth. In fact, actually kind of really being in a position similar to my own, I would say. I didn't come from a family of wealth. My parents, struggled early on. A lot of that has to do more than likely with the fact that, I was born when my parents were 20 years old, right? So they were fairly
Mhm.
young, not really established in their professional, careers.
Yeah.
In addition to the fact that I had some undiagnosed ADHD. So a lot of challenges, myself growing up as a child. And, really, I would say maybe a lot of that is maybe why you decided to get into cage fighting a little bit, because you grew up your entire life, having, gone through, some challenging times, some adversity, et
Mhm.
cetera. So, really appreciate you sharing that. Would you mind sharing a little bit more about, kind of that early life, when you were, life in Section 8 housing and how those challenges motivated you towards your
Mhm.
achievement in mathematics, finance, and AI?
Yeah, yeah. So it was. I guess the word that comes to mind is like survival mode. I mean, it was you know from day to day. What are we going to eat? What unexpected you know phenomena is going to occur? Um, Mom and dad were in and out of jail and prison. We had the SWAT team bust down our door. I mean, I could go on for forever, but just about wild and crazy experiences, things that people shouldn't, kids shouldn't see or go through. But I guess, and I was kind of an angry kid. I people around me had things, and uh, I kind of held that against them, perhaps. Um, but yeah, I was inspired, I guess, to get out of there, kind of grow up fast and exit, do something. Uh, I didn't realize. I mean, I didn't plan to fall into mathematics, but I was always kind of passionate about something. There was a time where it was, wrestling. I went to college only for wrestling initially. There was a period of time where I was kind of all in on playing chess. So I find things and they suck me in, and yeah, kind of go all in on those.
Yeah, well, it sounds to me like you found, your kind of purpose, purpose in life, so to speak. You found something that you were motivated and driven by, and you really have a passion. To me, it sounds like you have a passion for learning, right? Which I think is, it's an incredible thing when somebody possesses that deep desire to learn and to understand and to become educated. Oftentimes, people aren't quite built like that, right? And it
Yeah.
takes kind of a mindset shift for them to get focused in on, things that can really help them to become a better version of themselves. And I really see that in you, early on in your life, finding something that you were passionate and interested in, and you decided to dive in, and look now where it's brought you today. I mean, you are a professor, right? You understand, mathematics, statistics, jurisprudence. I mean, there's a number of different things that you've, chosen to take ownership in your life. What I'd really like to talk more about now is your kind of transition into the RIA world, right?
Mm.
So,
Yeah.
this, the types of clients that you service and support, the services you offer, more than likely have probably changed, over the time that you've been an RIA. So, what do those look like now, and what kind of inspired, the
Mm.
change?
Yeah. So for listeners or viewers, RIA stands for Registered Investment Advisor. Um, so I'm a fiduciary and able to legally provide investment advice. Um, I only specify that because there's a lot of people, uh, giving advice on different things, and there's certain requirements required to kind of go down the path that I've chosen there. And this is something, yeah, I'm really excited about and enjoying getting to help people to go to market fast and minimize legal and compliance. I started out just a very small niche clients, a set of clients, and also services. Investment advice, for an individual, given all of their goals and data, risk tolerance, and even then, it's only for the next 12 months. And then there's different reasons for that, some tax reasons, but also it kind of aligns with 20 years of building models in the insurance world. Policy lengths are 12 months, and kind of forecasting and quantifying risk over that future period of time aligned nicely. Now, that said, yeah, things based on the demand and services I've been asked uh, to provide over this last year, um, yeah, things have expanded to include retirement planning, tax planning, estate planning, education planning. And it's really been interesting. A lot of the people reaching out to me, I initially I was saying you have to be a data scientist, engineer, or actuary, somebody with a quant background like myself. But I feel like more than those people, I've been contacted by people in other professions who just want to work with an advisor that wants to work with those kind of people, perhaps, because there's been teachers, real estate investors, a variety of different people with different backgrounds. So it's been really fun. It feels really good. I've got a lot of people in my family that are helping people, doctors, teachers, lawyers, um, and for a long time, I we'd get together and I'm helping corporations make millions of dollars, and everyone else is helping people, and so this feels really good, getting to help people in a variety of ways.
A couple of the key terms that we oftentimes hear in the investment world are terms like risk adjusted, protected against the downside, conservative investment. We hear those things oftentimes in the investment world, whether that be investing in Main Street or investing in Wall Street. So can you talk a little bit more about kind of your, background and how that's actually helped you when it comes to coaching other potential investors in some of those hot button words, whether it be, risk adjusted, conservative investment, protected against the downside. Like those all sound really fancy on an investment pitch deck, right? But at the end of the day, somebody has to determine whether or not that investment truly articulates, some of what that investment offering is stating.
Yeah. And I like to think that the folks I uh, mostly work with appreciate me translating some of the kind of finance jargon that is common, um, while at the same time being able to talk about the technical details that maybe your you know uh, advisor at the local mall isn't able to go into the level of detail about the math and data and methods. So, I'm happy to go through those ideas one by one if you want, but I guess just at a high level, uh, risk adjusted, means like taking into account a risk-free rate that looks different over different periods of time. Um, what was the other one? Downside risk. So I guess mathematically, you could think about drawdowns, how historically have different investments or asset classes move to the downside. Um, Volatility, was that maybe one you mentioned?
Yeah, we could throw volatility in there or conservative investment,
Oh,
such things. Yeah.
yeah. So conservative. So there's a scale, that people you could think about people very conservative, want fixed income type investments or some kind of guarantee, and in that case, it's going to be a smaller uh, guaranteed return than perhaps somebody willing to uh, take on more risk where there's uncertainty and there's no guarantee, but you have a bigger potential return to move to the upside. So it's interesting to think about where people fall and what their goals are, and there's different ways of measuring this. but also I like to think about the behavioral finance type of ways to categorize or quantify individuals. It's really interesting, and I'm not none of those degrees you mentioned are in psychology, but I've been learning a lot about this recently. Uh, Really enjoying it. Um, I feel like I'm forgetting one of the terms you put out there.
No, you're exactly
Uh,
right. I mean,
okay.
everybody's got, certain, risk appetite, certain, risk tolerance, so to speak, right? And
Yeah.
I oftentimes will have investors that will say, "Hey, Jeremy, I've got a couple of different opportunities, to invest." Most of my investors are multifamily, or commercial real estate, investors on the passive side. And oftentimes I'll have investors say, "Hey, Jeremy, this particular offering is offering a 15%, projected, internal rate of return, over 3 to 5 years, whereas this other one, is projecting a 30%, internal rate of return over the next, 2 years." But it's not that one investment necessarily is going to be better or is going to outperform the other. It really just comes down to that, risk tolerance. Typically, a higher projected, return on the exit or the outcome of that investment typically comes with some greater risk, right? That might
Yeah.
be a, full value add, renovation of all of the units of the property, whereas something that has a lower, projected internal rate of return, maybe there is no value add element to it. So there's no risk in kind of the renovations, of the property itself, right? So it's one of those things where, I encourage investors, and maybe you do too, to not always chase after, the highest projected return, that's being offered in the pitch deck. That makes sense?
Yep. Yep. I agree. Yeah, and that's something that I'm required to and do go through with investors to understand not only how much risk they're willing to take and able to take, but that they're currently exposed to. Oftentimes, there's not an alignment with what they want or need and what they have. They might have very risky investments, but because of their age and situation, they should have a more conservative portfolio, or the other way around.
Yeah.
They're in something very conservative and but are willing to take on more risk, but aren't paying attention really to what they're holding. So yeah, I guess I can't help but mention I feel like there's this kind of long standing and adopted framework, modern portfolio theory, the mathematical framework that uh, somebody won a Nobel Prize in the 70s. It's not so modern anymore, but it's it's the norm, and asset managers use certain metrics to quantify risk-adjusted returns, the Sharpe ratio that everybody learns in school, and so investors are familiar with that, but um, yeah, it's a I just feel like it wouldn't even make my top 10 measures of performance. Um, so, so I have a framework to try to quantify what's called a utility function for an individual, to really understand what the best optimization metric is. And I know I'm getting a little technical. I'll stop, but I try to do that, at an individual level, so that I can, make recommendations based on what's best for an individual.
Yeah. And does that recommendation that you typically make, is that largely centered around maybe how old the individual is, maybe if they have a spouse, if they have children? Oftentimes I get, questions from investors as it pertains to this topic of diversification, right? Most investors are very heavy in Wall Street, right? And then, when it comes to real estate and kind of, cash flowing assets, they have none, right? Really, the only
Yeah,
real estate that they own, is maybe the home that they live in, right? Or maybe they've
yeah,
got a single family rental or something like that, which is a form of active, income, really not passive. So, when it comes to this kind of big topic of diversification, given your background, I would presume that kind of the leading, way that you determine whether or not a person's portfolio, so to speak, is diversified largely has to be related to maybe how old they are, in addition to maybe what their current lifestyle and future lifestyle is going to look like.
Yeah, so there's a lot there you touched on. I mean, in addition to questionnaires that might quantify this utility function I mentioned, which would give you mathematically a performance metric to try to optimize. Of course, age and family situation and health and goals, and all these kinds of qualitative variables come into play at the end of the day. They might answer the questionnaires a certain way that suggests, very high risk type portfolio, but of course, maybe that doesn't. I can't, maybe make those kind of recommendations if they're 5 minutes from retiring and have people depending on them and things like that. So, uh, I think diversification is important at any kind of level of risk tolerance. That could be um, somebody that doesn't want or shouldn't take on a lot of risk, as well as somebody that is okay taking a lot of risk. Even that person shouldn't have everything, all eggs in one basket, so to speak. So one can still take on higher risk. Think about leveraged investments. You could still do that across different asset classes, and and that could also include public and private markets. It could include real estate, higher risk. So, but at the same time, you could still diversify that, across higher risk investments, markets, asset classes, geographies, and that's really fun for me, and aligns with my time in the insurance world because taking on risk. I mean, that's kind of the name of the game. Understanding, quantifying risk, the distribution of your exposure across space and time. So it's really fun, and it means understanding or trying to incorporate information about risks, like at an individual level. That could be a person, a business, um, across geographies, um, you know, geopolitics. Bringing all of that information into models is just so much fun for me. Building machine learning models to try to understand that, because things are always changing, and it just means you know the job is never done. Like what I've built is never. There's always room to improve, I guess,
Yeah.
which makes it fun.
That makes sense. Now, one thing that I know about you, John, is that you have a deep interest and I guess, a deep understanding of REITs, right? Real estate investment trusts. So I don't want to assume that my listening audience fully understands what a REIT is, exactly, and more specifically to that, maybe what are you doing, in that space?
Yeah, I had never heard of a REIT until a few years back. Um, I'm a little embarrassed to say, until I did this international real estate master's program. And actually, I had always kind of ignored real estate as an asset class. Wife and I had moved around and rented and liked that, flexibility. But buying a place here in Denver, I thought I don't know much about real estate. I should learn, as I was going through, underwriting and uh, the buying process. So I kind of went all in for a bit and learned. I like to think quite a bit, and yeah, real estate investment trusts are fun. I feel, because these are publicly traded companies, and different from other companies in a variety of ways. But one important one is that they're obligated to pay out. I think it's at least 90%, um, to the shareholders. So it's if you invest in REITs, you're expecting some money in that way, but also, of course, the price of stock can go up and you can make returns in that way. And it's a way, as an advisor, I get folks that want to get into real estate, and depending on their situation, not everybody can uh, qualifies for joining you on a syndication or some deal if they're not a accredited investor, perhaps, or you know buying up some physical real estate. But it's a way to get in and start learning about different sectors. Everyone thinks office and residential, but um, there's timber and healthcare REITs, lodging, data centers, just a variety of different types of um, real estate sectors. And so I feel like including that in someone's portfolio and educating them is a way to get started. Maybe down the road they can learn more about real estate and build up some wealth and be able to move into some bigger opportunities. Um, so yeah, it's really fun for me, and I also feel like I guess my experience in commercial property insurance, a lot of the data that's used in those kind of models, um, I see overlap with what I learned in this program and the machine learning models that I build. I feel like it's fun and almost perhaps easier to kind of forecast, look at cycles, look at macroeconomic data and geodemographic and economic information, um, different types of real estate, and forecasting those, quantifying risk. I think is perhaps a little easier than some other asset classes.
Sure. Thank you for that background. That makes a lot of sense and good value to provide there to our listening audience. I would be doing this episode a disservice if I didn't ask you to share just one story from your cage fighting days.
Oh, okay. Oh, wow. Do you want something dark, fun? Um,
Let's go with
and,
something.
and, and-
Let's go with something PG to PG-13.
okay, all right. Yeah, maybe I can offline tell you about something dark. But I guess as a professor, I had some fights locally. This was in amateur fighting days, and I'd have students come watch me fight, and it was just a lot of fun. They Students like to kind of poke fun at me when I'd have broken bones and black eyes and stitches, but I felt like there was this almost animal instinct in the cage, and I could hear someone cheer, yell, and just look right into the crowd and spot some of my students, which was just a lot of fun. Uh, yeah, they'd come celebrate, after the after party, and um, yeah, they were really great times. I mean, you can't do it forever, but I'm really pleased that I got to have those experiences.
Yeah, I could only imagine that that'd be quite motivating to be in the ring. Look over in the stands, and you've got some students and maybe some former students, there to
Yeah,
watch, cheer you on.
yeah, yeah. I feel like it's one of those things where the highs were so high and the lows were so low, because getting beat up in front of friends and family, that's tough. But when you win, it's yeah, so much fun. There's nothing like being in a main event and everybody's eyes are on you, and it's just you and one other person. Um, it's awesome. I encourage everyone to give it a try.
Yeah, you won't find me stepping inside of a cage ring anytime soon. So,
Yeah.
but no, I appreciate you sharing that story. So, what's next on John's bucket list for maybe the back half of 2024 and beyond?
We got some travel plans, for the end of the year, but right now I got a lot of different things going on. I mean, I've got a demanding day job, but outside of that, I've got a few kind of entrepreneurial, experimental type things. A home swap platform I'm building the AI under the hood for that. Really excited about it. So it'll help connect people that want to go different places and in a more affordable way. The technology should make recommendations about, different places you might want to stay based on your interests and what's happening in the area, nightlife, or it depends. The idea is it learns based on your answers to questions to make optimal recommendations, or at least ordering opportunities. What else? I'm teaching, having fun doing that. Feels like a way of giving back. Yeah, just I know there's this idea of everybody wanting to stop working. This fire idea. I guess I just enjoy the different things I'm working on, and
Yeah.
the idea of not working on these things. Yeah, I can't comprehend that, at least at this stage in life. I mean, just really having fun.
Yeah. If you've got a work to do, and that work to do is something that you're genuinely interested in doing and pursuing, then it certainly doesn't, feel like work. But I know I've got both sets of my parents are retired and in their mid 60s. And I can tell you right now that their schedules are almost full every single day because they have to have
Yeah,
something to do, right? You
right.
can only, watch the Price is Right, so many consecutive days in a row before it's time to get back out there again. So,
Yeah.
really appreciate that, John. Want to just leave one kind of final question here for you today, and that is, what's maybe one or two different ways that our listening audience can connect with you to learn more about what you're up to?
So I've historically pretty much been offline, not on any social medias. I am now on LinkedIn, have been for a bit. I'm hoping to start putting out some content on maybe YouTube, educational content. But LinkedIn for now is best. If you look me up there. Also, my investment advising business. You can find story makers, investment advisors. Um, so yeah, that's probably best.
Okay, perfect. Well, we will put those links in the show notes for this episode. And again, John, really appreciate you joining us today.
Yeah, thanks. Thanks a lot, Jeremy. It was fun.
Absolutely. And listening audience, thank you again for joining another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.